Hey everybody, welcome to the live stream. Today is a session that was not scheduled, but I wanted to make a change to the portfolio, and instead of doing it myself, I wanted to walk you through click by click, screen by screen. Now I just want to make sure that you guys can hear me. All right, so if you missed this live broadcast, no worries. It's going to be recorded, and then you can watch the recording and see step by step. So I wanted to make a change in this Mara position. You guys might remember from last week, I have 100 shares of Mara that my effective adjusted cost basis is $9.75. And right now, Mara is up almost 10% on the day. I have a covered call expiring today, at the end of today, a $10 call that I originally sold for $14. And what I want to do is buy that back. So I can do one of a couple things. This is a really good educational piece that I wanted to share with you, which is why I'm going live without much notice. I can do one of a couple things. I can just wait today until the market closes, and then if Mara closes above $10, my shares will be called away, and I'll have kept the premium that I originally sold, the $14, or I can buy this contract back. Right now, this contract is trading at about $4. You can see the price here. This here is my Schwab platform. So just a reminder, this is a real account, and that's why I wanted to go live to show you click by click, step by step, exactly what I'm doing. So if I wanted to buy this contract back, right now it's trading for about $4, $3.50. I can pay that, meaning I took in $14, I pay $4 back, so I capture not all of the original premium, but most of it, and then I can sell a new contract for next Friday. And the reason I'm looking to do that is because this will probably expire worthless. Let's take a look and see what the delta is on this particular contract. So this gives us a really good idea. This is my $10 contract, my $10 call that's expiring at the end of today, and it has a delta of 29. So because we only have a few hours left, right now it's 12:33 Eastern time, there's only about 3.5 hours left until the market closes today. There's only a 29% approximate likelihood that Mara will end up above $10. So what I'm going to do is I'm going to buy this contract back by clicking on the ask. That pulls up an order entry window. I'm buying one Mara January 2nd, $10 call, and I'm going to put a limit price of $4, which is currently where it's trading. I'm going to confirm and send. I'm going to hit send. And now that filled. And now what I'm going to do is I'm always going to double check that that's gone, right? So it's missing now from my positions page. And now I'm going to sell a new one for the 9th of January, which is next Friday. And I'm going to pull up this $10 call. It's 35 bid, 37 ask. So I'm going to put an order in at $36, which is right between the two. I like to look at everything on the page, so I'm going to do it like this. And then I'm going to hit confirm and send. And now that filled. And let's take a look at that. I'm going to refresh the page, and then I'm also going to get to questions and answers, which I have up as well. So now we can see my Mara 100 shares, my adjusted cost basis. Remember, this was a short put that I had sold, I think it was a couple of weeks ago, a $10 put that I got assigned on. But my cost basis became $9.75 because it adds back in the premium that I collected when I sold that put. So I own the stock for $9.75. I sold this $10 call expiring January 9th. I sold it for 35 bucks, actually 36, but 35 is my net after paying the transaction charge. And now I have this position. Let me go through to the questions here. Let's take a look here. Just give me one moment. I can't see the questions. Just give me one moment while I check my... Here we go. Okay, so I love your content. Thank you, by the way. Thank you for saying that. I love that being assigned is actually a part of the process. Absolutely. Listen, when we sell a contract, when we sell a put, let me respond to that, Dirk, and I appreciate you saying that. When we sell a put, what we're doing is saying, okay, I'm going to take in this money. This is the premium that I'm being paid. And for that payment, I'm committing to buy 100 shares if the price drops. So assignment is never a bad thing. It's a part of the process. Too many people, listen, I've been doing this a really long time, and I talk to lots of people, and I've taught people one-on-one, and I've taught people in groups. And one of the commonalities that I see is that people freak out way too much, and they roll their contracts, they buy their contract back, take a loss, sell a new one that's further out. Listen, it does not have to be that hard. Here's what it means to sell options for income. You start with selling a put, you're taking in premium, and you are okay with buying those shares if the price goes down. If it doesn't, that's great. But if it does, that's also okay, because then you turn right around and sell a covered call just like we did. And here's the thing, guys. Let me show you a chart of Mara. Now, this is today, so today it was up a lot. And the reason why I wanted to do that today, buy my contract back that was set to expire today and then sell a new one for next Friday, the reason I prefer to do that is because Mara right now is up 9.8%, almost 10%. When a stock goes up, you make more money in your premium, right? When you're selling a covered call. When a stock goes down, you make more money in premium when you're selling a put. Now, don't worry if that sounds confusing, because it really takes experience and repetition to keep understanding these concepts. But the concepts are pretty basic. And once you kind of get the hang of it and just keep repeating it over and over again, it becomes easier and easier. So instead of waiting, sorry about that. I could have waited until Monday to do this, but I prefer to do it today because the price is already up. I'm not here to swing for home runs. I'm here to just hit singles over and over and over again. And anytime you create realized income for yourself, it's never a bad thing, right? So let's go through some questions. Let's see. Let me turn my phone off so it doesn't ring again. You gave me the confidence to pull the trigger. I've made $358 for November/December 2025. Big thank you. Man, I love hearing that. Can you guys still hear me? Just throw in some, okay, cool. I have a page on here that says an error occurred. So I just wanted to make sure that you guys are all connected. I love hearing that you're making money. That makes my heart happy. Listen, I think your success never minimizes my success. And I think the world is can be a happier place when more people are happy and making money and sharing different ideas. So I appreciate you saying that, and I love to hear that, and you're quite welcome. Okay, so somebody asked, wait, so you bought back your call that it was expiring today, then turned around and sold another one at the same strike for more money. How? Was that because the date is a week out? So let me just recap what I did. And if you missed the beginning, just go back to the recording, because no worries. If you ever missed the live stream, it's going to be here in this page as the recording. So here's what I did, guys. I had... let me go back to this page here. I had, and I still have, 100 shares of Mara that I paid $9.75 for. That was my adjusted cost basis after buying the shares from being assigned from that $10 put a couple of weeks ago, right? Then I had sold a call that was expiring today, at the end of today, and I got paid $14 for that. I could have just waited until that expired. But here's the thing, guys. Everything is flexible when it comes to trading. You're not stuck in something until expiration. You can buy your contract back, whether it's a put, whether it's a call, no matter what the strike is, no matter what the date is, you can buy that back at the market price, which might be more or less than what you originally received in premium, right? So I bought it back for $4. So I sold it for 14. I bought it back for $4. Effectively, that means I netted a $10 gain, right? 10 bucks. Then I turned right around and sold another call for next Friday on those same shares and got paid 35 bucks. Now, as we've been talking here just now, the price of Mara has been going up slightly. So the price of this contract is also going up. Now, what I have now is this $10 call that expires Friday, the 9th of January. So I'm just going to wait a little bit. Now, one of a couple things will happen. As the price goes up, as Mara goes up, or if Mara goes up, the price of this contract will go up as well. And in that case, I can just wait, and then perhaps if Mara price is over $10, I can just have those shares assigned, and then I start with a new trade that subsequent Monday. Or let's say the price of Mara goes down. If the price of Mara goes down, the value of this can go down as well. I can perhaps buy it back and then sell another one. So the intention of these live streams is to show you click by click on the screen exactly how that works. Now, it might be confusing because listen, trading, if you don't have a lot of experience and you haven't done it for a long time, trading can be confusing. It's new, right? So you have to just kind of just keep hearing the same concepts over and over again. A couple of people have said on my YouTube channel, oh my gosh, you're like, even my son says this, you're putting up the same content all the time. Listen, I'm putting up a lot of the similar content because it's not that hard of a strategy. There's only two strategies, selling a put, selling a covered call. And I know that sometimes it sounds like I keep saying the same things over and over again, but that's intentional because repetition is important to help you understand these concepts. So yes, I did buy it back and then I sold another one and I made money, again, more money on the same shares. Let me see what other questions I have here. Let's see, where's my questions? Oh, I got a bunch of questions. Let's see. Wow, this is so cool. I feel like I'm understanding this better. Thank you, Michelle. I love that. Listen, it's just about repetition. It's like learning a language. If you speak another language or if you ever tried to speak another language, it takes a lot of repetition, like over and over and over again. This is going to be so amazing. I think I walked through part of this in my last live stream. I'm creating this application that's very similar to Duolingo. For those of you who are familiar with Duolingo, it's, an application where it teaches you kind of like using fun, questions and answers and things like that. And it helps you understand foreign languages better. I'm creating the same thing, but for trading. So stay tuned for that. So don't worry, repetition is the mother of skill. It helps you to understand these concepts as we talk through them. So somebody had said, you made profit even though you bought and sold the same strike, which feels like a net zero change as strike is the same, but it's profit because it was a week out. This is amazing. It's profit because of this. Let me pull up my realized gain here. So on this screen, you want to take a look at the realized gain loss. So here is my, let's see. Previous count. Actually, I'm not going to see it yet because I won't see the realized gain loss. Oftentimes it has to, Adam, I'll call you back, okay? Just give me 5 minutes. So a lot of times you can't, maybe I can see current year. Let's see. Yes, I do see it. So here's my Mara that I bought back. So I originally sold it for $14. I can look at the transaction history. Let's see this. So my original sell was for $15. It might show $14 because that's net of the transaction fee that you pay when you enter an order. And then I bought it back for $3 here, right? And then I sold this new one for $36. So you want to kind of walk through a lot of these screens and start to get the hang of, okay, what exactly am I looking at? I'm looking at my positions over here, right? I'm looking at my transactions over here, and then I'm looking at my realized gain loss over here. So don't worry if I'm flipping quick or if you're not catching on, just keep watching the video. Oftentimes when you're trading options, this is really important, guys, your gain-loss ratio is going to be very, very high because you are, or you will be, if you're doing it right, you're going to be focusing on creating realized gains and minimizing realized losses. So hopefully that makes sense. Let's see what other questions that we have. Let's see. I have been trying to journal my trades. Sometimes it confuses me. And yes, practice, practice, practice. It is important to keep a journal. I mean, I always say like whatever might work for you, like whether it be like a notepad or I like to use things online like, can you call Adam please, Nina, on my phone? I like to use Excel spreadsheets or pages in my MacBook to kind of keep track of things. So whatever works for you, that's really important. Write down like, okay, this is what I did, this is why I did it, and then you can kind of reflect back to that, you know, at a future point in time. We need the repeating of information. Yes, absolutely. Repetition is the mother of skill. Somebody else said, keep going over it because it takes a lot of time for it to sink in. I am still trying to get it. Listen, don't feel bad about any of that. It takes a while, and sometimes people will think they get it, and then I don't know, some things happen, or they experience some different, you know, movement in their underlyings or different market, you know, activity, and then they thought they understood it, but then they don't understand it. Just keep watching the same videos over and over and over again. There's basically just two main strategies: selling a put, selling a covered call. And then there's just a few things that you have in those specific strategies. So like, for example, when you sell a put, the most important thing, choose the ticker, right? Only sell a put on a stock that you're okay buying if that stock drops. Because if it drops and you have to buy the shares, you have to be okay with that. You also want to take care in choosing the strike price. You know, what is the price that you are comfortable purchasing those shares? And then the expiration date, that's kind of easy. Me, I just use 1 week expirations. I want to create weekly income, realized weekly income, cash in my pocket, and I don't want to tie up my capital for an extended period of time. So that's important. And then when it comes to selling covered calls, it's kind of the same thing. Although it's actually a little bit easier when it comes to selling covered call because, for example, me, the way I do it, now you might do it different, you're going to find your groove, but the way I do it, if I own the shares for $9.75, I'm going to sell a $10 call rather. So I just want to sell a call at, you know, either the price or slightly higher than the price that I paid for the shares. Why? Because I don't really care so much about the stock appreciation. I'm not here to buy stock and I think it's going to go to the moon and I want to hold on to it for an extended period of time. No, that's not why I'm here. I'm here and I sell options because I want to put cash in my pocket every single week that I live on and that I can spend. That's the reason. I don't care about the stock. So again, you might feel differently, but that's I'm here to show you what I'm doing, and that's what I'm doing. So let's see. I only trade APLD. I'm starting to understand how the stock moves. That's a really good point. So I encourage you guys just to just start with one stock. It's totally fine. Listen, I think like the climate in general makes people think that they need to be diversified to be safe, and that's not necessarily the case. Oftentimes, you know, people might be trading a couple tickers, 3 tickers, 5 tickers, sometimes a whole bunch of tickers. And the fact is that there's not a lot of diversification amongst those tickers because oftentimes, like if you're trading similar types of stocks, one goes up, the other one's probably going to go up as well. And they're all kind of what we call correlated, right? So it's totally okay to start with one stock. And you're right, this viewer that says, I'm starting to learn how that stock moves, you are totally right. And when you start to become familiar with how that stock moves, it gives you not just a little bit more understanding, but it gives you more confidence in making your decisions moving forward. So that's super important. Okay, so somebody said if we sold a put and then the price drops, What can we do to not get assigned? I've rolled once, but the price has gone further down. Listen, I think rolling is the dumbest thing that people do and people talk about. And I mean that not in a negative way. I mean that with all due respect. And I think people just roll because they hear and they watch all these other supposedly super smart people talking about rolling. Here's what rolling is. And I have a great video on rolling. I'm going to put that in the, after this uploads, which takes a while, by the way, after the live recording. But after that goes through, I'm going to, I adjust the description, and then I'm going to add a link to this video I did on rolling a while back, and I'm going to do another one soon. But here's what rolling is, and I want to take a moment to talk about this. Okay, so in this example, I sell a put and the price goes down. That means the price of the stock goes down, right? That means the price of my put will go up. So if I buy it back, I'm going to pay more than what I originally got from that. Now, people that roll, they look at like what their net credit is, right? Okay, I'm going to buy that contract back, and then I'm going to sell a new one for next week or 2 weeks out, or with a lower strike price, or maybe both. And they look at the net result. That's not the right way to do it, in all honesty, because what you really want to look at is if you buy that contract back, you're taking a realized loss on that. Then you're selling a new one with the same risk, and you're kind of like just kicking the can down the road. That is like, I think, one of the biggest mistakes people make. I never roll anything. Here's how you should do it. And I'm not here to like give specific recommendations. I'm not a financial advisor, but I'm telling you, after like 30 years of experience and having made a lot of money, lost a lot of money, and gone through like thousands, probably hundreds of thousands of trades, I'm here to give you my really experienced advice. When you sell a put, you have to automatically think ahead of time. Okay, ABC ticker, I like that stock. And if that stock goes down, I'm okay buying it. And think through different scenarios. Okay, I'm going to pay $100, or it's a $100 strike. If that stock goes to $90, how am I going to feel? If that stock goes to $80, how am I going to feel? I created a new video. This is going to be good. I didn't post it yet because I'm still editing it, but it's kind of walking through all the stuff that I'm talking about now. These are things that you have to go through ahead of time. So if you sell a put and the stock price goes down, why would you roll that? Take assignment on it, buy the shares, sell a covered call. Now, it is a fact, if the price goes down a lot, you might not get a lot of money for a covered call, but you know what you do then? You consider selling another put as the price goes down. Now, I know it doesn't feel good, and this is kind of like contrary. This is probably one of the biggest problems that especially new people have. They want to sell puts, and they feel good selling puts when the price is up, when their stock is up. But really, you want to rewire your brain and learn to feel good selling puts when the price is down. It's just, that's how it works. And before you sell a put on something, you also, in addition to being comfortable with that ticker, right? Like thinking through that ticker and, hey, I like that ticker and I'm okay holding that for the long term and I'm okay buying it at this particular strike price. In addition to that, you also want to think, okay, if it goes down to X price, I'm okay buying more. Listen, if I like ABC stock at $100 and that stock drops to $80, if it's still the same kind of like fundamentals of the company, nothing significantly changed or anything, and the price is just lower, dude, I like that stock more than I liked it before at $100 because now it's on sale. But for some reason, people just are kind of, their brain is wired not to think through that naturally. So you have to like teach your brain how to think through that a little bit more naturally. I hope that helps. Michelle is giving a retirement seminar paid on January 8th. That's right, Dirk. I haven't really advertised that at all. But thanks for bringing that up. I do have a retirement live workshop on January 8th. I'm going to put the details in the comment section or the description of the video as well. I mean, listen, I give a lot of free content on YouTube, but then I have some paid content as well. So if you're struggling, like trying to like work through some of the concepts that we're talking about, or if you want like more of a boost to actually get moving and start creating yourself some income, you should consider something like that. Thanks for throwing that out there, Dirk. Let's see. Hi, Michelle. So I soon, let me just read this first. Money that was in hold. I'm not sure I understand that question. So I think somebody's asking about the money being on hold for that contract. Let me explain to you how that works. Now, I'm just going to use this as an example. Now, the $10 call that I sold this morning and I got paid $35, that money goes right into my account and I can use that right away. So that's part of this cash right here. That's part of this cash. If you sell a put and it's a cash secured put, meaning that let's say I sold, let's just go through an example. Let's look at Mara, and I'm going to, like, as an example, I want to sell a $9 put that expires next Friday. And right now that's trading at $15, 15 cents, but it's always represents 100 shares. So $15 would get dropped into my account and I get to use that money right away. Now, what's on hold, you might say, is the money to buy the shares if you got assigned. So if I'm selling a $9 put, then $900 out of my account is sort of like earmarked to purchase those shares if the price goes down. I think that probably answers your question. It is all, so Steve says it's all about cash flow. Listen, I think that is so important and I want to take a moment to respond to that. So many people trade stocks and they get so excited and they feel so amazing. Oh my gosh, I bought this, XYZ stock and I was so smart and the price went up here and I still have it and I made all this money. When you trade stocks, it's paper gain. Like, what does that mean? Like, can you take that and go spend it at the grocery store or whatever, or go buy something with it? No, it's just a paper gain. But trading options, selling puts and selling calls like we're doing on this channel, that creates cash flow. That's what Steve right here, viewer, is talking about. And I cannot stress that enough. Cash flow is like what makes the world go round. Like, how do you pay your expenses? How do you go do cool things? You need cash to do that. You can't just take your paper statement like, hey, I made 100% return on this amazing stock. Yeah, you're a genius, but can you spend any of it? No. So that's what selling options does for you. You're right, Steve. It is all about the cash flow. So anyway, let's see. I went for 30 minutes. I just wanted to hop on here quick to show you guys and make this change live, so I can show you step by step. I'm going to wrap it up for the day. But I'm going to come back on Monday. So Monday's a new day. Today's Friday. Happy New Year to everybody. Merry Christmas and Happy New Year. I hope everybody's enjoying the holiday season, spending time with their family, loved ones, that kind of thing. Life is short, man. Do what you want to do and what makes you feel good. But I'm going to be back here Monday at 3 p.m. Eastern Time. I'm going to put the upcoming live on the page, so you'll see that soon. And bring your questions. Let me know if you have questions. I'm going to put some additional information like I talked about in this description. And I want to thank everybody for coming. And I want to wish you guys all a successful journey in trading and a most beautiful kickoff to the new year. Have a great day.